Happy Wednesday, everybody, and welcome back to another week of Here with Moving to Georgia YouTube channel, bringing you all the information that you need to know about making a move to Georgia. I'm Sarah Mislowski with KeyPoint Homes Group, and I am blessed to get to help so many of you day in and day out make that move here to Georgia. And I have a really good treat for y'all tonight. I have John Burchfield with Capital City Home Loans with us tonight. John is one of my great preferred lenders, and every time he's on, he brings so much value and answers so many great questions. Welcome, John.
Hey, thanks for having me, Sarah. It's great to be here.
Yes, thank you. So this is a pretty important broadcast that we're having here because I'm pulling you away from the Braves game, which is live right now, game 3 of the division series.
I decided I had to see, am I going to watch the first hour, hit pause, and then come back to it, or just wait? So I decided to just wait. I know nothing. I've got about 40 text messages that I'm hiding from my fellow Braves fans. We're not going to look at those. We're going to get caught up later on because I'm excited to talk to you today about some mortgage stuff.
That's right. So no spoilers if you're watching. Don't let us know how the Braves game are going. We're going to keep it a mystery.
We'll see how that goes.
Yeah.
Unless they're winning 19-0. If they're winning 19-0, somebody go ahead and tell me. I'll save my time watching the game.
That have happened, we need to know about.
Yeah.
So welcome. Thank you for joining us tonight. Let us know in the comments where you're watching us from. It's always so much fun to see the corners of the world that we get to reach. Usually we have a couple of international viewers, but the real purpose of having John on here is that there's been so much movement in the mortgage market, and it impacts your ability to buy a home for people that are watching so much that it's just, so important that we have these regular conversations and make sure that, I'm keeping you, the viewer, up to date on everything that you need to know about mortgages. So we've got a couple of people jumping in saying hello and thank you for our time. So thanks for joining us. Greatly appreciate it. So John, let's just kind of start off with like where we're at today. Yeah. What are interest rates today?
Good question. So for the average homeowner that we're locking in today, you're going to be in the mid sevens, right? Somewhere at 7.3 to 7.75. That's what we're seeing for either FHA, USDA, VA type financing or conventional. They're all packed in there together. It's worth noting, just a little bit better than where we were the end of last week. And unfortunately, the chaos that we're seeing in the Middle East is putting some downward pressure on interest rates. Whenever you have these geopolitical events that, creates turmoil in the marketplace, that often leads to mortgage rates getting a little bit better. Nothing we can get super excited about, but hey, we'll take every little improvement we can get right now.
Yeah, definitely. So if you're just joining us, if you have any questions about mortgages, buying a house, whatever that process may be for you, go ahead and let us know in the comments. And as we kind of get you up to date on everything that's happening with mortgages, we're going to answer your questions. So make sure that you drop those below in the chat so that we can answer your questions that you may have, because there is a lot going on and the market's drastically kind of different than how it has been the past couple of years, which really affects buyers right now. So the big question that everyone wants to know is, will interest rates ever drop? And, if viewers have been watching this channel for a while, at the beginning of the year, a lot of experts were predicting that by the third, fourth quarter of this year, we were going to see interest rates drop. And
yeah, we missed that one. Yeah, you're right. But yes, the answer is yes. Of course, what goes up comes down, right? Markets move in cycles. Now, it is clear to note that what we've seen certainly during COVID, and what the Fed did and what the U.S. Treasury Department did in order to prop up the economy while they had all the massive close downs, and what that did to bring interest rates down to 2s, low 3s, that's not realistic. Right. I mean, the chances of seeing that, I'm still shocked that we ever saw it to begin with. But certainly interest rates normalizing, into the could be as low as high 4s to high 5s. That range would be very, very much expected. The big question is, where do we land in that spread? Because that's still a pretty big spread. And when does it happen? And I think that's the big question. When does it happen? You're right. The smartest people in the room earlier this year said Q3, Q4, we're going to start to reach that peak, and we're going to start to see some improvement so we can roll into Q1, Q2 of 2024 looking good. They missed it, right? Inflation was just sticky is the term that they're using. So the Fed is committed to keeping short-term interest rates higher for longer is the language that they're using to make sure that we don't get into a roller coaster ride with interest rates, which is a good thing. We don't want to see a dip and then them have to go way up because they have to, fix what they prematurely caused. So they're taking their time. They're being patient. They're waiting on the data to come in that clearly indicates that they've got inflation under control. And then we'll start to see rates improve. If I had to put a guess on it, we've probably pushed it out a full year. We're probably going to see Q3, Q4 of next year before we start to see rates improve. And that will even be fairly slow in the beginning. It might take 6 weeks before we see anything, 6 months rather, from then before we see anything really significant, which brings you to spring of 2025.
Wow. So one of the things that I feel like we always get in the market whenever there is an election coming up is how will an election impact interest rates and buying a house? Right. And so is that something that you think people should be taking into account, or how could that either positively or negatively impact the real estate market in terms of interest rates?
That's a good question. I do think it's a factor, right? I mean, nobody wants to go into an election year where there's this angst, this underlying anxiety about interest rates being so high. And this is not just mortgages. This is what they're paying for new cars, used cars, credit card debt. Student loan payments are now getting kicked back in after years of being in forbearance. All of that is the rates are higher now on all of that debt. And it's going to affect people's pocketbooks. And it's going to have some effect. But how much of an effect does it have? I mean, how much control does Washington have over interest rates? If the only control they really have is getting their fiscal house in order, can they get close to a balanced budget? That's what the markets would be looking for that could bring interest rates down. So I think that there's a desire in the political environment for interest rates to be lower. I'm just not so certain how much control they have over it, because the Federal Reserve Board, that's an independent entity. They are supposed to operate outside of Washington politics. So that's not a great answer to your question. I think it'll have a small effect, but we may have seen that same type of decreasing in interest rates right around the election. Might be more of a coincidence than it does the election actually driving down interest rates.
Got it. So if you're just joining us, I've got John Burchfield with Capital City Home Loans, one of my great preferred lenders, on the live stream tonight. And our goal here is to educate you on everything that's happening with mortgage rates and also answer your questions. So if you're watching and you have a question that you want to ask either me about making a move or John having to do with, financing, we have the expert here to answer your questions. So go ahead and put those in the chat below. John, one of the questions that I got from a viewer that really wanted me to make sure that I asked this to you tonight was, whenever people are considering a home loan today in this market, should they consider an adjustable rate mortgage, or is a fixed rate mortgage still the best deal, or what is that looking like?
Good question. So first of all, every option should be on the table. Right. We're no more into those days where you don't even think about it. I'm going to take a 30-year fixed or a 15-year fixed. We want to explore every potential option that might be available to that borrower and have in-depth conversations about what their personal finance structures like, what their budgets like, what their short and long-term goals are, so we can get the best custom fit in mortgage financing for their particular situation. So that's the 30,000 mile view answer. More particularly, ARMs are a great option, right? Especially in the jumbo market, right? And when we talk about jumbo, we talk about folks that need to finance more than $726,000. Okay. And that number is likely to go up in the next month or so. But when they're getting into that borrowing power, that level of loan amount, then those loans are not bought and securitized by those government entities, Fannie Mae and Freddie Mac, that we hear talk about. And therefore, ARMs become even more attractive than the typical fixed rates do. And so we often go with adjustable rate mortgages.
And with that jumbo loan, it's not necessarily the purchase price of the house, it's the amount that's being financed, right?
That's right. Yeah.
Okay.
Yeah. In fact, that's most common. There's a lot of deals, especially in our Atlanta metropolitan area, that's, 800, 850 price point. That's a big market. But by the time they put a little money down, we often are in the conforming loan limits.
Yeah, definitely. So that tees up kind of like another good point for us to kind of talk about, which is, are home prices going to come down to combat high interest rates? And, I talk with a lot of clients day in and day out, as do you. And this is kind of a common conversation that we have is, sometimes I talk with clients and they say to me, we have flexibility in making our move, and we think we're going to wait until interest rates come down to make our move, because either to make it more affordable or with the expectation that home prices are also going to come down.
Yeah.
Do you have those conversations with clients?
All day, every day. It feels like Groundhog Day with that particular conversation, for sure. And I can understand it. That's exactly where my head would be as if I were a buyer. Why would I buy if we're expecting interest rates to be lower in a year? I can wait. I'm in no big hurry, right? But there's a huge fallacy with that argument. And we know this because of two key things. One, we witnessed it in 2020, 2021, and early 2022. And two, the law of supply and demand is always going to win out. So what we're talking about is we know that if interest rates come down, that the demand for housing is going to skyrocket, right? It's already high. So as you bring, not to get too much in the weeds, but let's say that you're buying a $500,000 home. Well, right now, maybe only, let's just make some numbers up. 30% of the population qualify for that $500,000 home. So forget who might want to buy the house. 30% of the population qualifies for it. Well, if interest rates come down a point, that goes to 40%, right? So you've just added a whole lot of folks that are going to compete with you to buy that same home. What does that do? Pushes up the price. So you may have saved a point in interest rates, but you may have paid $30,000 more for the house. You didn't save anything, right? You didn't save anything. In fact, likely, I would predict it's going to cost you more over the long term to wait on interest rates to come down by having to pay more for the house or miss out on that perfect home. How many times have you seen where the client walks in, perfect home, got to have it, I'll pay whatever. And they don't win, cash offers, 10% above asking price. We saw that. And we're likely to see it again if interest rates were to improve.
Yeah, 100%. So, that is a great point in that, most all of the clients that we helped in, especially 2021, early part of 2022, almost all of those clients were paying over asking price for the house in order to get it. And, that was kind of an expectation, is that you're not paying list price. That's just kind of like the starting price of the house. And sometimes for clients, it took losing out on 3 or 4 homes to finally get that one.
Yeah.
Well, the flip side, the advantage that you have right now is that there's just not that stiff competition. So, sometimes the best properties are still fetching multiple offers, but there's a lot of great properties out there where you're that seller's only offer. And so you're able to negotiate seller pay closing cost or a little bit off the purchase price of the house. Whereas if we push off that move until next year, when rates are better, there's more people that you're physically competing with to purchase that house. And I think another important piece to that is that the reason that you're going to be competing for that house is because we still have a huge inventory problem in the market, which is what's causing home prices to really hold steady and not fall at all. Is because even though we have less buyers out in the market, we have even less sellers out there in the market. And I've covered on the channel the past couple of weeks that, inventory is down 30-40% than what it was this time last year. And part of that reason is because a lot of would-be sellers have amazing interest rates on
Yeah.
their current house. And so this is a graphic from a great resource that I have, and it's finding that 70% of homeowners have a mortgage rate less than 4%. It's making it really hard for these folks to think about selling.
Yeah, we call it the golden handcuffs of interest rates, right? It's got them kind of locked into the house because they could want to move, but they've really got away walking away from an interest rate and getting near double the interest rate that they're currently paying.
Yeah, so that means that right now the inventory that you see coming on the market is mostly new construction homes, and that takes a long time to build. It takes a long time for that inventory to show up in the market. And then the other houses that you're seeing, resale homes, typically those are because people are forced to make a move. Either someone died, someone's getting married, someone had a baby and they physically need more space, or they're relocating for a job.
Yeah.
And so all those typical would-be sellers, that would possibly move to get a bigger house, or they want a bigger backyard, they're saying, hey, I have a really great interest rate and I don't want to do that.
Hmm. Yeah, and a few other things. I mean, looking just this morning, the Producers Price Index came out, which is a measure of inflation that the Fed looks at heavily. And inside that data showed that building materials for new homes, you're referencing resales. So we've also got the builders out there trying to catch up to the market, right? Provide supply. But building materials are still 40% higher than they were in 2020. 40%. So every nail that goes into a new home is 40% higher now than it was 3 years ago. So you're not going to see any rapid depreciation in home values in resales or new construction.
Yeah, 100%. 1818 commented, especially when we were talking about having all options on the table, that they thought that was a really good idea. Wealth of knowledge with these two pros, and that you should definitely consider all options. And that is one of the things that, whenever we're thinking about purchasing a house in today's market, it's important to look at everything that you have available and really understand what your options are, so that you're educated and not just reading a headline and guessing what you think the outcome might be, because you may have more options than what you actually think you might have.
Mm-hmm. Exactly.
George asked the question, John, so do we buy now with high rates, given that you found the perfect home, and ride the high rates until next year when rates come down? If so, then do you just refi into a lower interest rate?
George couldn't have teed it up better. I mean, I
Yeah,
think he answered
yeah.
his own question. That's exactly right. The
I
mortgage
did
is
not pay
temporary.
George, by the way.
Yeah, I know. The mortgage is temporary, right? We're going to restructure that thing, which brings us back to the question that 1818 commented on, is we're going to look at adjustable rate mortgages. We're going to look at all options because we have a high probability that whatever mortgage we're taking out today is really a temporary mortgage, a stopgap to get them in the home today while there's less competition, while they can get the seller to pay closing costs. You didn't even mention contingencies. I mean, goodness gracious, people had to buy homes for over 2 years with no due diligence, no appraisal contingencies, no financing contingencies. It was just, I'm taking the home no matter what. And that's a real scary place for a buyer to be. So it's exciting to see those contingencies be in play now. But to George's point again, absolutely. Mortgage is temporary. We're going to refinance, likely to a much lower interest rate or a more attractive loan product altogether, or a little bit of both, in the next, who knows, 12, 18, 24 months. And they still got the great house that they want.
Yeah, for sure. And, it's important for us to talk about this because, as your real estate agent, as your mortgage professional that John is, we want to make sure that whenever you're making this decision, you're doing it with all the education possible so that you can make the best decision for you and your family. I would be a bad agent and John would be a bad lender if we didn't tell you that buying a home 12 months from now is likely going to be more difficult and more expensive. And you're going to be kicking me and be like, hey, why didn't you tell me that we should have bought last year and we could have had, more options, less competition, better terms in our ability to find a house. And one of the big reasons that you're not going to see cheaper houses next year is because home prices are still appreciating, albeit they're doing it a little bit slower than what we have historically, or at least over the past 2 unicorn years, where we saw double-digit appreciation in home prices year over year. We're returning back to kind of like a more normal home price appreciation. But the bottom line is that it's still going to cost you more to buy that house a year from now than it is going to be today in terms of the actual price of the house. Not to mention, I guess, if we're in multiple offer situations, we might be back to this is just the starting price of the house.
Yeah.
And I would venture to say that this is probably even more important if you are under, I would say, $600,000 purchase price.
Mm-hmm.
Because really the $400,000 price point range has become the new first-time home buyer price
Mm-hmm.
point. And there are so many people looking for homes in that price point, and there's so few houses out there that fit what you're looking for in that price point.
Yeah, very good point. And I love this chart because people, when there's a lot of national media out there that people will listen to that says, "Hey, home prices, have declined," or the rate of appreciation has declined, which is a funny way of mixing up words a little bit. But we have to. This thing is extremely regional, so national averages don't play really well. The Southeast is booming and has some of the strongest, underlying fundamentals that are in the housing market than other parts of the country. So I tell people that I think Georgia's kind of going through what we've seen the Northeast or the West Coast might have gone through 20 years ago. Well, now it's kind of the Southeast's turn to go through those, housing crunch because folks want to live here.
Yeah, 100%. So this is a map of the United States that shows the percent change in home prices over the past 5 years. And this is comparing from quarter two of 2023. And you can see that Georgia home prices just over the past 5 years have appreciated 71%. That is a massive amount. And if you see the Southeast there, Tennessee, South Carolina, North Carolina, Georgia, and Florida, we have the area's highest home price appreciation. And it's because so many people find it so attractive to live here. Just like hopefully you watching this, you're finding this an attractive place to be. And
Yeah.
we want
And
you to jump in on this and take advantage of this great home price appreciation that will happen in the future for you as well. And we want you to get in when you can get a home at a good price.
Yeah, as much, what's amazing about this is even though we've seen that type of appreciation in home values over the last 5 years, there's still a lot more to go. Our median home price here in Georgia, relative to some of those other areas, the Northeast and the West Coast, it's still unbelievable. When somebody's moving from the West Coast, I'm sure you see this all the time, and they find out what kind of house they can get for 500,000 here, they're blown away. That would be 800, 900 where they're coming from. So there's still great value in the Southeast, even though we've seen that kind of appreciation over the last 5 years.
Yeah, there's nothing better than getting an opportunity to help clients from all over the country get here and hear how much they love it and hear them talk about the differences of what they can get here versus what they get back from wherever they're moving from. I find this part is kind of surprising to me, John, is that a lot of clients will comment how green everything is and how much trees we have everywhere. And I'm like, y'all don't have trees where you're from?
They're not talking about pollen season, are they?
No. Yeah. They don't.
The yellowish green?
Yes. Yeah, that's right.
We're not going to tell them about that. Let them experience that firsthand when they don't know what that is. It's all over everything.
That's right. So if you have any questions about making a move, buying a house, anything about mortgages, make sure you drop those in the chat so that we can answer your questions right here live for you so that we can give you all the information that you need to know or that may be on your mind so that you can make a really, really great decision. What would you say, John, is maybe like the number one thing that you see with buyers in terms of challenges or problems or things that might be preventable for someone that's looking to buy a house that might be good for them to do?
Pre-approve early. I don't think it can be too early, right? The more time we have to develop a game plan and review numbers and talk about strategies, the better, right? So buyers often get well, I don't want my credit pulled until I know for sure I'm moving.
Or I think that is the biggest feedback that I get from clients is that they don't want their credit pulled.
Yeah.
And dive in on that. Tell me why that is a good or a bad thing right now?
There's multiple scenarios you can think about, but the first thing I would say is one credit inquiry rarely has any effect on someone's credit, right? And even if it did, rarely does it have a significant enough of an effect to make a difference in anything they wanted to buy or finance. Okay. Certainly if they have great credit, right? Credit inquiries become more problematic if, we've had a hiccup or two in the past. Then it could be something we want to watch carefully. But the big advantage, number one, to getting involved in the approval process early is letting us check the credit to make sure everything lines up with what they think it is. Okay. I can't tell you how many times we see a random $30 medical collection that might have moved the credit score down 20 or 30 points. That is so easy for us to fix if we have time. Yeah. Right. Or they're using a credit card every month to get the points. I do this personally. So, if you were to pull my credit at a particular day of the month, it'll look like my revolving balance might be really high, but we pay that thing off every month. Many buyers do that same thing. Well, we've got to develop a strategy where we say, hey, for now, we want to keep that balance just a little bit lower so that we can take that credit score just a tick higher, which may save 0.25% in their interest rate, saving them thousands of dollars over 5 to 10 years of their mortgage financing, much less 30 years. So it's a big deal, and there's no downside, right? If you think you're going to move, the facts that we can provide you on the lending side, pulling a game plan together, letting you know what that financing plan is going to look like, is going to help you make the best decision for your family, right? You're not going to be guessing anymore. You're going to have the facts.
Yeah, and I think the important thing for clients to know too, and you've helped many of my clients with this, is that if they have a credit score that is not that great, or if it's borderline getting them to that next tier where they can save money, you have tools available that you don't charge a fee for, where you can look and tell someone, hey, here's the plan over the next 3 months, do X, Y, and Z, and this is going to put you in a much better financial place to buy a house in terms of credit score and interest rate that we can offer you. And you kind of do that kind of credit counseling as part of just your lending services to help them save money and be in a better position.
That's right. I'm glad you pointed that out. We don't charge $1 for any of this stuff. I mean, what we're working for is the opportunity and the honor to help them with the financing when they get ready to buy and find the perfect home. That's what we're working for. And we love to do it. We got a great team working behind us to put together these plans and make sure that we get the right fit for the buyers. And it's a lot of fun. We enjoy it.
Yeah. Scott asked a really great question.
Yeah.
What mortgage percentage drop makes it worth it to refinance? If I had a 7%, should I wait to 6, 5? Like, what is that magic number? How do you know?
So back in the day, everybody said 2 points. That was the standard. Oh, it's got to go down 2 points. I do not like that math at all, because I think it depends on a buyer's unique situation. So the first thing we're going to talk about is, well, how long are you going to be in this house? If this is a buyer that moves a lot for work and, they're hopping all around the country for different opportunities and promotions and whatnot, then that drop in interest rates has to be more significant, because the savings on a month-to-month basis has to account for whatever cost might be associated with the refinance in a shorter period of time. So the rate's got to be much lower. Okay. But if someone says, oh, we love it here, we moved in this school district because we wanted our kids to go to school in this school district, and they're in the 3rd grade, right? Okay. We're going to be there a while, right? And this is very common. We're going to be there for the next 10 years. So at that point, we're going to look at, okay, well, even if we're only saving 3/4 or maybe a full percentage point in that scenario, it could save, again, thousands over that 10-year period of time that they plan on being in the home. So it depends on the unique situation. But that's another thing that we're going to kind of put on autopilot a little bit for the buyer. Once they use us to finance their home initially, we're keeping an eye on what interest rate did they lock in and close at, where the market's at, and we're going to be in contact with them and start having that counseling of about, okay, well, we could save this much money per month. What are your plans for the home? What are you thinking? Do you love it there? Do you not love it there? And that'll be conversations that we have ongoing to try to find try to time as best as we can the perfect time to refinance.
Yeah. Scott, I think this brings up a good point for you and probably a lot of other people watching this, that when the time comes, because it's going to come, you're going to get pressure and solicitations from lenders to refinance your loan. You want to make sure that you're working with someone that's going to take you through that question and answer process to make sure it's the best situation for you. Because I know a lot of lenders out there, they just want to get that loan completed and on their books. They don't care that you're thinking about selling this house in 2 years and this financially may not make the most sense. They just care about, their sales quota. So really make sure that you are connected with someone like John, who's going to ask you those questions to make sure that it's in your best interest to do that.
Absolutely. And that's a real shame. There is a lot of I call them fly by night mortgage lenders. When refinances start becoming popular again, they pop up like weeds coming in your yard. They just seem to be everywhere. And they buy the publicly accounted for data, the publicly recorded data that shows you what the interest rates is on the security deed, and then they just bombard that individual with telemarketing. And oftentimes they know that we're the originating lender because, again, that's on the security deed. They make the correspondence look like it's coming from us. They will put our name in there. Now, in tiny little print, it says we're not your originating lender, but it's some kind of squirrely practices out there. So yeah, I tell folks, just keep me on speed dial in your cell phone and shoot me a text, and we'll keep the conversations wide open and find the right time.
I had an encounter with a lender a couple weeks ago, and so if you're in the market for a new construction home, a lot of times the builder is going to have a preferred lender that they're going to want you to use, and these are a lender that they have a relationship with, and usually there's some sort of incentive tied to using this lender. Well, my buyer, this is the one I was telling you about previously, had already been connected with this bank, and we were working with some numbers and trying to get this buyer approved for a certain home. We were able to negotiate some seller paid closing costs that I knew that if we could use some of those closing costs to buy the rate down, should cause him to qualify for the house of what we were trying to get.
Mm-hmm.
So I called the lender. I said, hey, I'm in the process of negotiations. I think we have $20,000 that we can use to buy the interest rate down. This should help him qualify for more. Is that what you're seeing? And she said, what? What are you talking about? And I was like, buying the interest rate down? And she was like, I don't know what you mean. And I was like, don't know what I mean? Like, this is, lender 101 right now for all lenders in the real estate market. And so I immediately got off that call and I called up the buyer and I said, we have to abort mission. This is the worst lender I've spoken with in a long time. She doesn't know anything what she's doing, and I can't give you good advice that you should follow through with using this person. We have to find someone else to use. And I was just blown away by that conversation.
Yeah, and that's a shame. Oftentimes with the builder's approved lender list, the lenders may be great, who they're working with, but the lender themselves will put often very, very, I'm gonna call them rookies. They'll put rookies on the account to manage the account. And that's just the way the compensation is going to be structured. I mean, I'll let you see behind the curtain a little bit there, because it's a captured account. They're not going to get the same type of compensation that they would if from other self-source type business. And but rookies are willing to do that, because they need the experience of getting some loans under their belt and learning. But for the buyer, it's a pretty big investment. You don't always want, you wouldn't want the first guy out of med school to be doing your brain surgery, right? And it's kind of the same thing when you're buying new construction. A lot of times, not always, but a lot of times.
Yeah, that's right. So I immediately connected him to another preferred lender that the builder had, and kind of shared the war story with the other lender of like, this crazy lady didn't even know how much, couldn't explain or walk through the buy down process. And she mentioned to me, I guess, like she looked it up in some back end, and this lender had only closed 2 transactions the entire year.
Yeah.
So I guess you'll have a database for that. Kind of similar, realtors have a database like that as well. But I think it's just so important to really make sure that you know who you're working with and what experience they have. Because when things are easy, it's easy for them to do their job. But it's when the reason that you want to work with a professional that's really experienced like John or myself is that you need us for when things get messy or when we encounter problems, and because we're skilled and have the experience to know how to work through those and find solutions.
Yeah, for sure. Um, it's kind of like, and maybe you see this too on the real estate side, but you don't know if the service level is good in lending unless you've had to experience bad service level,
Yeah.
right? That
Yeah.
makes you appreciate it. It's like you just think, okay, this is easy. I fill out the application, I turn over some documents, and I go to closing, right? Well, we make it look easy. It's not easy. If you really saw what went on and the different levels of compliance and market data and underwriting and cross checks and checks and more data verification and then checks on top of that and then back to underwriting again to make sure you did it all right. The levels of that is extremely complicated. It's not easy. We're the most regulated industry in the world. So unless you've experienced it bad, you don't necessarily know what good looks like. You just kind of got to take our word for
Yeah. And please take my word for it. There's sometimes I talk to clients and I'm almost to the point in my career where if you tell me that you're working with a certain lender, I will tell you, thank you. I can't be your real estate agent.
Yeah.
Just because they are so difficult to work with. And I know that you're going to have a terrible experience. And, I was telling John earlier that we're on the front lines as real estate agents. And sometimes I feel like a lot of things that could possibly go wrong in a real estate transaction that may be outside of my hands, you're going to look to me to say, why did this happen? And I'm the one that's there with you, walking you through this. And it's my job to help you have a really good experience. And, I have enough experience now to know that there's certain lenders where you're going to have a terrible experience. And I don't want that for you. And I don't want to have to work through those problems either.
Right. Yeah. It's amazing how much you hear the same kind of horror stories, from a select few, that tend to give, a lot of folks a bad name. But there's a lot of good lenders out there. But yeah, you're right. There's some that you really have to watch out for.
Yeah. And I tell clients this, that just like there's great lenders out there, there's also great agents and there's also a lot of bad agents. So,
Mhm.
it's one of those industries where you do have a lot of good with the bad as well.
Yeah, for sure.
So if you have any questions and you're joining us, make sure you drop those in the chat below. We've got John Burchfield with Capital City Home Loans with us, and we're talking about the real estate market and answering your mortgage questions and helping you figure out what to do. So we've talked a lot about home prices and should you wait, should you not wait? And at the end of the day, though, for you as potential buyers, you still have to be able to make it work now for it to work for you, right? So we never want to encourage someone to buy a house now if they can't afford it now, right? You want to make sure that you can afford this, because that opportunity to refinance maybe a year from now, maybe 18 months from now, we don't have magic balls. We wish we did.
Right.
So you really want to make sure that you're putting yourself in a good position for that. 1818 says, you arm us with knowledge and it's appreciated. So,
Oh, thank you. That's nice.
yeah.
Love doing it.
Yeah, it is a lot of fun. So are there any, sometimes I get questions from clients that will reach out asking about down payment assistance programs or things like that of that nature.
Mm-hmm.
What do you see in the market? What are the pros and cons?
So it might be my second most common question. We talked about my most common earlier, but there are lots of down payment assistance programs on the market. Some of them are reserved for first-time home buyers. Some of them you don't necessarily have to be a first-time home buyer to get. And the way these first-time home buyer programs or down payment assistance programs work is they provide a grant or a loan. Some are structured differently for a portion of or all of the borrower's down payment needs. But there's really a kind of a catch-22 that makes these very frustrating to work with. And that is that almost all come with income caps, meaning they won't allow the household, not just the borrower that we have on the loan, but the entire adult household to earn too much money and get the grant. In other words, they're going to reserve the funding of their grant program for those that they feel need it the most. Okay. Well, here's the conundrum with interest rates, with sales prices. To qualify, you're gonna 99.9% of the time have household income that exceeds those limits. So you may qualify for the down payment assistance. You're not going to qualify for the house. You may qualify for the house, but not qualify for the down payment assistance. Those two things aren't matching up in the current climate.
Yeah.
There are some that, there are two in particular that are still viable because the income caps are really high. One is the Georgia Dream program, which is a fantastic program funded through Georgia's Department of Community Affairs. The challenge with that is the closing costs are a tick high, higher than normal on a normal loan. So when we talk about a Georgia Dream buyer, we want this to find a home where the seller will be willing to contribute a large sum of down payment of closing costs. Because if the seller's paying those extra fees, win-win, right? But
So
if the
this is a
seller's
good,
not paying those,
so this is a good scenario where the cost of waiting could be detrimental. If you're someone that might use a Georgia Dream grant to help you buy a house, if you waited, let's say, and put off the home purchase until next year, you're going to have so much competition that you're not going to be able to negotiate those seller pay closing costs, whereas you
yeah.
can do that in today's market.
Or how many times in 2021 did you see a seller even willing to look at an FHA offer, which is Georgia Dream's deal? I mean, you
Right.
can't, they won't even consider your approval letter.
Yeah.
So yeah, you're 100% right. Those are the kind of buyers that we want to have the most direct conversation, because they could take advantage of the current marketplace probably more than some of the others could.
Yeah. So John, if I'm someone that's watching this either live or on the replay and they're thinking about buying a home and they want to talk with you, how do they find you?
Call my office line. And I say that because even if I don't answer, we've got a team of folks that it will roll to. So you hopefully will get a live person. And that's 678-226-7887. And if you do get my voicemail, you'll see my cell phone on there. So you're always welcome to shoot me a text or call me on my cell phone anytime.
And we'll make sure to put your contact information in the pinned comment under this video as well. Of course, you can also reach out to me, and I would love to put you in connection with John so that he can answer your questions and dive into your unique situation. John, sometimes I have clients that will watch this, or potential people, they're thinking about maybe Georgia, but then they end up like in South Carolina, or maybe Tennessee is the best place for them. Can you help them there?
Sure can. Yeah,
Okay.
we're licensed basically throughout the Southeast. If you take a picture of the Southeast, covering Maryland, Virginia, down through the Carolinas, Tennessee, Mississippi, Alabama, Georgia, and Florida, then you would represent our footprint, and we're licensed to lend in any of those. So their pre-approval would be valid if they choose not to move to Georgia and go somewhere else. We can take care of them throughout the Southeast. I think they're going to love Georgia. I do. Yeah. So we hope to have them here. But certainly if it doesn't work out that way, then we can take care of them.
Yeah. And so occasionally I get clients that, do end up deciding that maybe another state is a better fit for them. And one of the things that I can help you with in that scenario is I can help you vet out a great real estate agent. So you'll already have a great lender working with you like John, and then I'm going to be able to help you pair that other missing piece for you, which is connecting you with a really, really great real estate agent that's going to give you the same level of service that I would. So if you're thinking about making a move to Georgia, my contact information is directly below this video. Thank you so much, everyone, for joining us tonight here on the live stream. I'm with you every single Wednesday answering your questions and updating you about the Georgia real estate market. And then, of course, every single Sunday, we have a scripted video coming out educating you about all areas of North Georgia to help you make that decision of making a move to Georgia. And if you haven't already liked and subscribed to the channel, make sure you do that as well. And again, my contact information is directly below this video, and we will put John's there as well. Thank you for joining us.
Sounds great. Thanks, guys.
Thanks, John. Bye, y'all.
Bye-bye.